Hey, good morning, everybody. This is Donna with Integrity Business Advisors coming at you from Zillow, Washington. And today I wanted to share with you some thoughts about business credit. So oftentimes when I'm speaking to clients, they struggle a little bit with, business credit, but more important, they struggle with personal credit, which kind of flows into the business credit. So I'm sure that you know that, when you're first building your business, your personal credit is tied to your business because your business doesn't have any credit at that point. So that's natural. But once you get further into your business, you want to build that business credit. And I'm going to share with you in a little bit just why you would want to do that and how you would benefit from it. So we all know that in order to have a strong personal credit, you have to have that credit if you want to buy a house or you want to get a loan for a car, apply for, your typical credit card. So strong business credit lines can improve your company's chances of qualifying for business loans. It also helps you to get lower interest rates, negotiate better pay terms, and a lot of times attract new customers. Sometimes, these days, customers really kind of pay attention to, what your credit is like and how you do business, as well as increasing your cash flow, which automatically increases the profitability of a company. So there's a few different implications of separating your personal and your business credit. So they're two different things. Your good personal credit score can help you qualify for greater financial responsibilities in your personal life, like buying a home or a new car. Your business credit simply reflects your financial health related to your business. So it doesn't tie into your personal at all. So and that goes off of your EIN that you would have with your LLC, to set up your bank account. So they would go off of that number, and that's what they would check your credit with. So when you start developing those business relationships with other companies, they can have an impact on your business credit. So that also plays into how others kind of view how your business does business. So while you have great personal credit, it's not always a reflection on how you do business. So you really want to, be careful of that and make sure that you're building your business's creditworthiness. So a few reasons why you would want to have these separate are, as a contractor, you feel obligated to use your personal card, and write personal guarantees if your business doesn't have credit. And that comes with, more exposure, because as your business grows, so do your responsibilities and potential liabilities, because you're paying more vendors for more materials, all of these different things that come about with a growing business. So your personal risk exposure increases with the growth. You have greater personal liability. It's difficult for lenders to get a clear picture of what your business creditworthiness is because it's kind of intertwined with your personal. So they can't really get a good idea of what that actually looks like, and that could be a little detrimental to, what you're really trying to do. So your personal credit score also will take a hit every time your credit is pulled for a business. So like if you're signing up, new vendors and they want to pull credit to see how you pay your bills, every time, if you're using your personal credit, it's going to tag that. And as you probably already know, it does affect your credit rating when it's tagged too often. So the main takeaway from these negatives for having them combined is that personal guarantee. So the personal guarantee will take away from the liability that you're covered on when you have a corporation. So if you're an LLC and you're recognized as an S corp, there's some liability coverage as opposed to being a sole proprietor, which attaches everything to you as a person. So if you're an S Corp, if you're a C Corp, you have that corporation, you've got that umbrella because it's a standalone entity. So it's completely separate, and so it's almost like it's its own person. And so when you're signing a personal guarantee, you're eroding that. So you're making yourself completely reliable and responsible for that liability. And you want to get away from that. You want your business to stand on its own, have its own credit, and develop it that way just to protect yourself. So that kind of goes into, how you want to build credit. So number one, you don't want to wait. You want to start building credit as early as you can that, you're capable of doing. If your credit, your personal credit isn't great, then I would suggest working with someone that can improve that and help you, get a higher score. And that takes a little bit of work, but there are professionals out there that will help you do that. And it's very effective. Register your business with the major credit reporting agencies. Make sure you open a bank account that is in your business name. You need an EIN for that. And you can ask your vendors or the suppliers that you work with to submit your payment experiences to the credit reporting agencies as help to build that credit up. Pay your vendors on time, obviously, build those positive relationships. Check your credit of your business regularly so that you can make sure that there aren't any errors. And if there are errors, you want to get those taken care of, because often if somebody's reporting incorrectly, it can have a negative effect. So the other thing you can do is apply for financing in the business's name. I just recently did this because I needed to get a piece of equipment for a separate company that my husband and I have. And we ended up getting a line of credit in the business's name, which was awesome. Because that will remove liability from my person, and it's strictly with the business. So that was a really good thing for us. So I would encourage you to do the same thing to avoid using that personal credit and apply for the financing strictly with your business information. Other considerations. So positives, you can request higher trade credit limits from your suppliers. You can request lower premiums from insurance policies, negotiating lease terms on equipment and real estate if you need to buy a building or a warehouse. You can bid on more lucrative contracts and seek line of credit increases, all favorable. So with that, that's what I have for you guys today. If you would like a copy of this document that I'm showing on my screen, just shoot me a message. I'm happy to share it with you, and I hope you guys have an awesome day.